Good evening, guys. John here, Forex Fire, Smart Money Concept. Okay, first of all, this is the end of the official first week of starting this group up. If you can be so kind to drop a comment below and let me know if you have been getting value from what I've been posting out there, whether it's from the training, the odd bits of videos that I have been doing in the group, and also analysis and things like that. Are you getting a little bit more of an understanding on how easy it can be to trade without having to rely on things like indicators and things like that? So just drop a comment below and let me know, okay? So I promised a video tonight, okay? We're not going to be looking at setting up any trades because it is the end of the week. I promised at the end of the week, secret sauce video, okay? As you know, if we head over to the actual Discord channel, and what I'll do is I'll share my screen in a second. Share the screen. If you head over to the Discord channel, in one of the modules, okay, we speak about breaker structure 1 and 2. Okay, is this going to load? Yeah. So in the training modules, we go over a breaker structure, okay, and I teach you how to trade the normal fib levels, okay, without having to rely on the breaker structure 1 and 2. Now, the signature move, they're fantastic for getting in on precise sort of bankers entry, banker strategy. But I'm going to teach you when you're waiting for these ones to watch, as we'll call them, a breaker structure 1, breaker structure 2. I'm going to show you just how easier it can be to catch the downtrend, okay, and ride the wave down, or catch the uptrend and ride the wave up, okay? So what we're going to do, just going to head over to the charts, and I've got this set up at the moment, the CAD JPY, okay? Now, we speak a lot about break of structure, okay, and it's very important when it comes to noticing or understanding in the markets, where do you put the fib levels, okay, where do you put the zones from swing to swing, okay? Now we have a lot of wicks on here, as you can see. These can create equal lows and things like that, but we'll treat this area here right now. Let's get rid of that. We'll treat that as our highest area, because as you can see from here, we've more or less got equal highs, okay? So what we're going to do is, if you go to the top of here, click in and go to lines. This just eradicates all of the noise, okay? This is going to help you identify if you had a breaker structure. Now, if we go back to the candle side at the moment, okay, and I'm just going to show you something. You can see here, would you class this as a breaker structure? Okay, you can see it's very minimal. Does it look like it to you? Again, to the eye, to me, even from me looking at it, I would say it does. But when you switch over to a line chart, it cuts out the noise of the wicks. You can see it actually doesn't, because we've got a sharp spike here. Okay, so when you do that and you see the crosshair, you'll see there's a little bit of a blue spike underneath. So what we do is, okay, you are going to identify this here, because you've got a high, and then you've got a new high point, okay? We can do from this swing point, let's take a look, down to here. Now look at this, guys. There's one trade right there. We've come down, okay? That's to the point. We've come down, we've come back up, and we've retested to the pip, okay? This here going to, if you went to the 272, you're looking at about 35 pips to the 618. There's 45 pips, okay? So if we mark that out there, we can see we've done it from there, okay? Let's go back to the normal candle chart, okay? And you can see we get rid of this. Go back on the crosshair, get rid of this. So from there, you've had around about, what was that? We'll do it on the lower side, 36p, 36 pips, okay? And we'll just make that a little bit smaller, right? You've had the correction, okay? Now, what you're looking for is the breaker structure of that now when you get the correction again, okay? You can clearly see you haven't really got a dip until you've come down here, okay? Let's just scroll this out. Might be a bit of a bad example, to be fair. No, in fact, you've got it here. Let's just go back onto the line chart. Does that go lower than this? Just a fraction, can you see? I'll put the crosshair underneath that sharp point. You can see it's just on the money. Let's do the fibs from the swing point down to this. It'll be this structure here. It doesn't quite come back into touch. So again, nothing lost there. Get the brush. We'll then be coming down to these sort of areas simply because we've had the big push down, okay? You can get the fibs and go all the way down to the swing point here, to the swing low. We've come down, pushed up, you could have got an entry here. Again, you've shot down to this here. That there, guys, to the pip. 121 pips. Okay, so just going to write on here. That's a 121p. Now I know we've rode this back up. However, even though you're getting in on the trade here, you could still technically start entering from the top of here as well, guys. Okay, so we go back to the candle charts. Ordinary candles. Go on the hour. Go back to the candles. And just identify with the brush a high point. Okay, we've got a high point here. We've got a new low point. Did we break the structure of the previous? Yes, we did. Okay, let's just take a look. Down to there. Look at this, guys, once again. Get this back on there, John. In the money zone. Okay. You've hit that. Again, that's gone all the way down to do a 70 pip move. Just going to write on here 70p. Let's mark the next area down, the next high is here. Okay. And then we're coming down to this. Okay, did we break the structure of that there? Yes, we did. Let's mark that one. Look at this, guys, to the pip. Now you see why I like these fib levels. And again, guys, if we look at the pips caught, down to 272, 57 pips. Just get rid of that there. $57 pips. Okay, let's get the next swing. So this is the new high. Didn't get a break of structure to here, so we'll miss that out. We've got one here. Broke a structure from there. Break out your fibs. And lo and behold, back to the money line, to the 618. pips caught, little bit of drawdown, pips caught, 51 pips, going down to here, 51 pips. Okay, guys, we look for the newer high. Now I can tell this newer high hasn't pulled back. Okay, but we're still going to draw it out. So that's the newer high, because we'll come up and then we'll come down. You can clearly see from the fibs it hasn't come back to test. Okay, nothing wrong with that. Just simply move on to the next leg. Got the high. You've got this bit here, because it's broke the structure of that. It's come down, it's done the correction, broke the structure. Do the leg. Lo and behold, it's touched. Okay. Oh. There we go, it's touched. How many pips did we get out of that? And then it's getting exhausted at the bottom here. Okay, we can see that's give a good 70 pips. Okay, that was a 70 pip move, and there's still more to give, to be fair. Get rid of that. We've created that high here. Okay, and just created that high there. Okay, on the correction pullback, we've come back down to this area here, not this one, but this one. Pull the fibs out, down to here. Lo and behold, look at this, guys. Once again, do you see the pattern? See where the pattern sort of is emerging here? And this is how you can stack your trades going down your levels. Okay, so again, we need to get that fib back on, don't we? We need to measure it out. So it was from here to here. Measure out the 272. There's 110 pips here. To here, 110p. Okay, guys. Once again, got a high to a low, but again, you've got nothing on here just to see that it's going to be reversing. And then we've got into what we then go, and we speak a lot about this. This phase. So what's happened is you've rode the trend down. Okay, this is what you're riding down in the trend. Okay, this is what you want to ride. But then once you go into this phase here, see this here? When you go into this phase, you know what this phase, this is where you get excited. You're waiting for break structure 1. Okay. And then that is going to be, and I'm going to talk about this in a minute. So that's your push up. You've got the break structure 1. Okay. You're just waiting then for your break structure 2. And however low this comes down on the break structure 2, okay, when you come back up, you're marking this area here. Halfway point of that is going to be basically your entry for, let's have a look. This will be your entry for, you guessed it, that could be your entry for the bankers. Okay, so again, guys, looking at the Wyckoff method, when you are getting the impulse move, which is this, from a swing high, okay, you're going to get all of this sort of maneuver. We can just get this you're going to get the, where we are, to get the right one, John. Where are we at? Lost it. That one there, man. Right. So what you're going to be getting is this. Okay. You're going to get this all the way down until you get the push, and then you enter this phase here, which is going to be a consolidation phase. But if you've got this impulse move here, you can ride all of this all the way down until you all of a sudden enter this phase where it's creating equal highs and it's creating equal lows, which in turn traps the retail traders. Okay, so what you guys are going to end up doing is you'll get the best of both worlds with this, because one, you've learned the fib levels. Okay, you're learning my secret sauce of my fib levels. Okay, on top of that, as you're riding the big trend, if you're at the highest point on any pair, that's when you need to get excited as well, because what you're doing is, you know, when that's hitting these equal highs, okay, let's just show you again, that's when we are hitting this sort of stuff here, and it's not giving a push anymore. You can get excited because you're going to ride the crest down. If you get that impulse move, you see this here, you've got an A, B, C. You've got the big push. So 1, 2, 3 touches. Normally the third or the fourth touch on an equal high, you're going to get a break. It's either going to be a break to the downside, or it's going to be a break and a push to the upside. A 3-drive push, as we call it. Okay, guys? Now, I hope you get loads of value from this tonight, okay? So what we'll do is, if we have a quick look on this, and we just sort of add these up. Okay, we'll just get the calculator out. 36 pips, 121, 70, 57, 51, 70 plus 110. We've got all of that. Okay, 515 pips, and then we went into the consolidation phase. Okay, 515 pips. Let's just have a look at the date range. So we entered from the top of here, we ended down here. 10 days, we'll see 11. Just divide that by the 11 days on one pair. There's 46 pips to 47 pips per day of trading. Okay, guys? Fantastic stuff. So again, just to recap with this, use your line chart to the best of its ability. Okay, this will help you sort of identify your swing points, okay, and draw on your fibs, right? Keep taking notes on what we are doing. Practice drawing these up. The homework for tonight, okay? The homework, what I want you guys to do for tonight or over the weekend, it doesn't have to be tonight, is identify areas like this, okay? And I want you to draw, okay? I want you to draw the high to where the swing is. Draw out the money box, okay? Draw out the money box like that and keep it like that, and find a trend and have it where it's got the trend, it's gone back to retest. And I want to see within a trend, I want to see at least 3 steps going down where you would have caught the entry. Doesn't have to be to the pip, that could be slight drawdown, but I want to see a 3 drive on the trend down or the trend up, and I want you to mark out this here where you would have gotten in on the entry. Okay, I want to see the high above brushed and the high below where you've marked with the fibs. Okay, where you've got the entry, and then underneath on the lower part, I want to see the amount of pips you would have caught, okay? Because if you can identify how to mark these areas up, you're on to a winner. Okay, guys, I do this each and every day, and you only really have to pick the good paying pairs, okay? It could be things like the GPP pairs, the Euro pairs pay well on this sort of stuff. But again, guys, always when you're trading, when you're looking for this sort of push, when you're going to try and sort of trade with that in mind, you need to be in the session that's currently live. So if you're going to be trading GBP pairs, make sure the London session is there. If you're going to be trading the USD pairs, make sure that you're trading during New York session, because that's where you're going to get the most volatility on the moves. Okay, so again, let's recap. What I need you to do for homework: identify a very high swing point, make sure it is an equal high area where the trend goes down. We'll do this on the 1 hour time frame. I want you to mark out a step, okay, from the high point, and then draw your fib down to that lower, the next lower. Mark out the money zone with the box, okay? The box, what I do, I've got it drawn out. I've got the highlighter or the outline on black, and I highlight the inside the box turquoise, so it's very clear, okay? Once you get the pull back and then the maneuver down, when you get the 272 or the 618 fibs, okay, has been hit with the TP, I want you to mark that out on the bottom level on how many pips you would have caught. And I want to see 3 of those on your chart, okay? So again, guys, for those that have possibly not got the fibs on there, what we'll do is I'm going to have a quick markup on the fibs. This is what your fibs should look like when you're using them, okay? You should have, let's get this in, you should have the 0, okay? A 1, a 0.786, a 0.71. The entry can be anywhere within this box or within the drawdown bit. The 0.5, which I'll go later in depth on some other training. You got the naught, the minus, it's a minus 0.272 and a minus 618. Okay, guys? So again, just to reiterate that. In the box, trend, extended to the right, a minus 0.618, a 0.786, a 0, a 0.71, a 1, a minus 0.72, and then the 5 in there, okay? You can have the background on if you want. I don't tend to. I just have it very faint. And again, labels to the right, values in top. Okay, guys? So I hope you've seen some great value with that. Again, please, please drop your comments below from this video. Let me know if you've had any aha moments with what I've shown you this week. Have you been putting this into practice? Have you been getting value from what I've been showing? Would you recommend showing this to anybody else who's wanting to get in on trading? And please be so kind, if you do have a little bit of time, go to the very bottom of the channel menu, and if you can do a little bit of a donation towards the page just to help with the upkeep, with everything and the time and efforts that I'm putting into everything that I'm showing everybody, I'll be ever so grateful for that as well, guys, okay? And there's going to be more coming into next week. So watch the video back if you need to. Get stuck in with the homework. Any donation is kindly appreciated. Again, guys, my mission is to get you guys profitable without relying on the indicators. And I hope what I've shown you there tonight is just giving you a glimpse and giving you the confidence to realize just how powerful that can be without having to rely on. There's nothing wrong with using indicators, don't get me wrong. There's never nothing wrong with using indicators. But this is just showing you with confidence, with those fib levels, on this downtrend, how many times we caught that. You've got it once, twice, 3, 4, 5, 6, 7. There wasn't one losing trade. 7 times in, not one losing trade. Do I need to say more? And with that being said, guys, thank you very much. Look forward to hearing your comments. your feedback and the reviews that you're going to give me for what I've shown you this week. And again, don't forget, click that donation page, guys. Thank you very much. See you later.